Alright, guys. Epic little intro there. That's one of my favorite songs, actually. That's Requiem for a Dream. You might remember it from the movie, but also from Lord of the Rings, second one, I think. Alright, so hopefully this is running okay today. I am getting some frame drops though. This is not the new computer. Um, yeah. No, this is not the new computer. Still a technical pullback, in my opinion, to clear out a fair bit of the recent rally. I don't want to be sitting here being overbought again and again and again, and then you know not as a trader anyway, going into the final week of trading, not being aware of how dangerous it is. Okay. It sounds like the sound's okay. It's doesn't seem to be pausing too much right now, and it looks okay. So yeah, the computer is like a 3 times upgrade coming, so hopefully it's going to stop any of the problems there. I don't know if it's a processing power or the internet. Internet seems to be pretty stable. It seems to be more on my end that the bottlenecks are happening. So yeah, this is the way I'm approaching it. So if that's going to happen or potentially happen, then you might see a relief rally in the euro, and that would be back towards that 105, 105.50, and the pound should do not that great, but that would set up a euro pound short. A euro pound short that would be really nice to sell into. So the euro pound might get back up to 85, 75. Sorry, 85. And then, maybe we'll get back up towards that 86, 87, and that would be really, really good selling levels if you're a soft Brexit fan. The euro's going to have a lot of issues, at least for the first 6 months. Maybe the second half next year they'll do fine, but it's a pretty nice way of playing the long pound without fighting the US dollar. So I just want to wait for sort of what the clean out happens here with the dollar yen, if it happens, and then there's a lot of trade potentials in that pullback. It might be a little bit scary as well when the dollar yen pulls back. It might pull back quickly, whenever it does. It might pull back from 120 to 116, or might pull back from here to 115. But there'll be a couple of days where the market's just moving very sharp. You saw a preview of that a few times in the last month. But I suspect we'll get a bigger than normal one at some point. We just need that catalyst. And look, to be honest, you might not get that catalyst in the next 7 days that are left in this year. But at this point, that's what I'm looking for to re-enter the market. I'm not really interested in mucking around at these high levels without some technical correction. And as a fundamental trader, that's a bit weird to be giving so much respect to the technicals, but this is one of the biggest rallies I've seen, unabated rallies for a while, and a few things are happening all together, right? That the Dow 20,000 is just a big level. It's not that key, but it's good as well level as any that the market might test and reverse from over the next couple of days. So that's the way I'm playing it. Now, you saw pretty heavy selling in the Aussie last night, then a nice little recovery, and then more selling this afternoon. I think this is got potential to be the weakest pair in the market. And if stock markets fall over, that's not going to help the Aussie. In fact, it'll be really the weakest pair in the market. It's everything's weak against the US dollar, but I suspect that the Aussie will be the weakest in any sort of stock market pullback. So it's something to keep on the radar as well. At no point am I considering buying it at the moment, even against the Kiwi. It's in a lot of trouble. 71.80 is the first level that is notable for the support. Then below that, I think people will start talking about 70 cents pretty quickly. And it's been a while since the Aussie's done anything. If you look at the dailies, you can see the Aussie's been very well behaved for 6 or so months. But yeah, this sort of level is very easy to be tested on a continuation here, or just any risk off. And I suspect I wouldn't be looking towards the buy side unless we got below 70, much closer to 68 than we currently are, which is only 400 pips away, right? But it's just the Aussie's been so well behaved that traders are sort of forgetting how fast it can move. So that is the Aussie dollar. The Kiwi, its close friend, is getting wrecked as well. And it's the one which has the most room to move. But I suspect the Aussie would get more attention than the Kiwi. And selling the Kiwi, right, that is a game which has proved disastrous in the past, right? Really hard to sell the Kiwi. Really hard to sell the Kiwi. Especially if you're selling low. It can do the sort of reversals that are just super sharp. So yeah, there's no rush to be trading today. There's no rush to be chasing the markets. Nothing really wrong with selling the euro, selling the Aussie, buying dollar yen. It's just not my cup of tea. In the final few days before Christmas and New Year, I want to see that big pullback and then get advantage of those nice levels. What are you saying there, Jack? It's cutting in and out, mate. The audio seems okay on my end. I'm just checking the stream now. Let me know, guys, so it's been misbehaving. Make sure that you're in the public room, FX Street Fighter, and you might have to refresh the page to see the charts. We're just talking about the general positioning here of the US dollar. We'll struggle through, okay? We'll struggle through. Nothing too much on the economic calendar, so it's not an economic calendar game. It's more just watching that 20,000 on the Dow, seeing what the stock market wants to do, if it wants to push through or not. The main thing that markets may be watching is the crude oil inventories. Now that we're past OPEC, it will come back to being the main oil mover. And then tomorrow you've got the Kiwi GDP, which is pretty tier 1 data for New Zealand, but it's not. I'm not trading New Zealand dollar at the moment, so it's not really something I'll be too hyped up about. In general, I'm a big US dollar fan, and I've taken profit on nearly every trade I've got. I got short euro going from a really nice level, so I'm just letting that run. But that's the only trade I've got going. I'm looking to sell euro pound. I'm looking to buy dollar yen on the appropriate dips. Look, the market doesn't have to do these big 300-point pullbacks either. I'm happy to get into dollar yen anytime there's a reversal from a sell-off, anytime there's a stabilization. But this is not the level that I'm keen on. Yesterday we looked at Credit Agricole's No, sorry, we looked at SocGen's 2017 outlook. Today I have for you, I have the Goldman Sachs 2017 outlook. That is the main report that we're going to watch, and that's probably what we're going to be doing for the next week, right? Getting each bank's different outlook. Remember, Goldman Sachs got destroyed last year because of just everything they did was like wrong. they really they're the butt end of jokes, but they ended up being pretty right about the US dollar, but in the initial part of the year they were very wrong. So that's it's easy to take down the big dog, right? Everyone likes to see them fail, but how they're usually very good. They've got the best guys, so maybe just ego gets in their way. Like Jan Hatz is a god in there. All right, pretty big one. We're gonna skip through to what we get the most something until we find stuff that's interesting. Alright, so they're just going to review some of those things they had. There was a bit of concern about China at the very start of the year. That has not been resuming at all throughout this whole year. Now, whether that comes back is pretty important for the Aussie dollar, and I'm an Aussie-based trader. But the China stuff is really on the back burner. There's definitely a lot of heat in the housing market, and the stock market stabilized since that crash they had. But they've, I think everyone sort of acknowledges that it's unsustainable, and really what sort of pullback, what sort of soft landing they seem to be orchestrating, how stable that will be. There must be some unintended consequences of doing that. Alright, so if you remember what we talked about yesterday, the ECB and BOJ, the tapering of their QE is the source of the reversal that may happen next year against the US dollar. If the euro and the dollar and the yen start to rally, it would be on the back of their central banks beginning, at some point to look like they're exiting the easy monetary policy. Now, if that happens, then especially if the euro is underneath parity, like 95 and dollar yen's at 130, those sort of levels is where it gets pretty dangerous to think that the market can only go one way. And sort of, if there's any sort of pullback in the US Fed rate expectations, and it looks like the ECB is pulling out and the BOJ, say we get inflation around the world, and it forces BOJ and ECB to go neutral very quickly, and at the same time maybe some stock market volatility stops the Fed raising rates, or just some slower than expected US growth stops the Fed raising rates 3 times, which is a lot, then you could really see big 1,000 to 1,500 point moves on the euro higher, back to 110 from 95 say, and for the dollar yen pulling back to 120 or 115 from 130. I think that's going to be a theme in the second half of next year, assuming that the US dollar rally just continues without any major hiccup. The market loves that sort of taper talk, right? It loves to play that as a theme as well. And it'll get sick of the US dollar strength story at some point. And there'll be something new to play. I didn't know that. That's a fairly big chunk of assets from those central banks. 13 trillion. Mostly US. Oh, we're not going to look at Brazil. All right, so it's 2017 political risks. And this, if it shapes up to be exactly as the polls are suggesting, then there is no real big threat from the French elections. If Le Pen is beaten by Fillon in the second round, then that's like game over for that sort of source of volatility. All right, so everyone's talking about March being when Article 50 is going to be triggered. There seems to be discussions going on, a lot of movement in between UK and EU at the moment. Now we should expect more stories from that, and if it does end up being this soft exit, then the pound is a fairly, you know, has a lot more room to move than most against the US dollar, and I suspect it will be the strongest pair in the market, even stronger than the US dollar next year. Once the sky does not fall in, then there is that big reverse trade, and especially pound yen led. And I'm talking like 2,000, 3,000 pips higher on the pound yen. But they still suspect we're going substantially lower. 114 on the pound. And yeah, so look, they have a current account problem. That's true. Everyone talks about that. So, they have to get funding from overseas a fair bit, mostly from Europe. Now, this is something that I'm much more interested in. This is international trade issues and how it's going to play out. Basically, if the US wants to go down the line of China being a currency manipulator, how that plays out will be the key in terms of global sentiment, I believe. And if anything's going to shake China to the core, some sort of uncontrolled trade war, might be enough to turn it from a soft landing for their pullback to a hard landing, and then all bets are off about how the market will. You only ever really uncover rot, right? Like the market doesn't focus on negativity until there's something negative going on, and sometimes like even companies which are close to going under, they don't go under until the market changes, and then everyone starts looking for negative reasons, or the bears start coming out, and then certain companies will fail, and then there'll be domino effects that are just unforeseen, and that'll be sort of the ultra negative case for China to get into the hard landing. Yeah, the euro downtrend, Emilio, I think is going to test parity for sure. Probably go a little bit lower than that. No reason to be counter trend trading just yet. So Goldman's view is just more divergence until second half. You know, Trump is actually not exactly a pro US dollar fan. He probably is going to start complaining about the strength of the US dollar. I mean, he already is against the yuan, but I think he might, be working for a weaker US dollar in the background. It really goes against his manufacturing pledges and getting jobs back to America if the US dollar is so strong to make it uncompetitive. So I suspect that could be another little for us currency traders. And then there's another big curveball, OPEC. All right, how OPEC? What happens with implementation here? The compliance. You're going to hear this word a lot, compliance, and whether the non-OPEC members actually deliver on. At the moment, oh wow, it's really cutting out here, guys. It's not even. All right, so this is like a little summary. Uh, their consensus. They're looking for 125 in 12 months on the dollar yen and parity on the euro. Consensus is 105, 114. I suspect that this consensus is not updated. You're probably going to see that rise up a little bit. All in all, though, they seem pretty neutral. They're definitely nothing there which I was surprised by at all by Goldman today. Perhaps because they got so much wrong last year, they're trading wise, they're coming with more conservative pro US dollar, Fed raising rates. ECB not doing much, inflation not doing much as their main game. No China issue. But yeah, I don't know. Tomorrow I'm gonna try and find another US bank for tomorrow, or maybe even a Japanese bank, And it'd be good to get a little bit of their view as well. And hopefully we get this new computer so that we can stream a bit cleaner. It's been a little bit of a hassle. Sorry about that, guys. It's not the way that I want to run. All right. Other than that, keep an eye here on this Dow at 20,000.